Hi, welcome back to another session of the Biz Boutique, Business Insights and Solutions. Once again here with our wonderful co-host Digna Montañez from Dreamline Accounting.
Hello, how you doing everybody? Hope you have a wonderful day today.
Today we will be talking about the different types of ways you can register your business. Digna?
Okay, just first clear to know that when your employer tell you that they will pay you with a 1099, meaning that you're not an employee anymore and they will not take deductions from your paycheck, that means you're your sole proprietor, you're a business owner. And the first, automatically, when you get a 1099 and you go to prepare your taxes, that's becoming a sole proprietorship, and it's fill out a form. It's called the Schedule C, where you're going to put all your gross income, take out the deductions applicable to that, and we're going to talk about that in another session. And you're going to pay taxes on the net, not only on the net on income taxes, but also self-employed taxes, which is Social Security. Now, if your income is developing a lot of money, let's say over 20,000 net, you should consider then register your self-employed income or sole proprietor as a business. And the first option is LLC, Limited Liability Company. When you have a limited liability company and you're the only owner, the effect on taxes is the same. It's going to be on the Schedule C, gross income minus deduction, paying income tax and self-employment tax, which is Social Security 15.3%. So to avoid that, you have other option what to do with that LLC. And the first option is converting that LLC to an S-Corporation. S-Corporation means subchapter corporation. That's a classification from the Internal Revenue Services. It's not that you register an S-Corporation. You're still an LLC, but for tax purposes, you are an S-Corporation. And what that means is that you report in a separate tax return. It's called the 1120S, your gross income minus the expenses, and from the net it gets transported again to yourself, to your 1040, your individual taxes. But at this time, you select how much you want to be paying yourself as a salary to pay the Social Security, and then on the rest you pay income tax. So that means you're going to pay taxes on all your income, but it's split. You don't have to pay 15.3% in all your net income.
And that makes a difference.
That's make a big difference, because let's say your net is come like 30,000. So if your net income is 30,000, your gross income minus deduction 30,000, 15.3% is like $4,500 that you have to pay in Social Security, plus your income tax depending on your status. But let's say your income tax is 10%, so that will be $3,000 on income tax. So you're paying $7,500 for that net income of 30,000. But if you do a S-Corporation, a classification for the IRS, then let's say that you want to assign just $12,000 for salary, you only pay 15% of that $12,000 as for Social Security. So that is saving a lot of money, because that's like $1,750 on Social Security instead of $4,500. And so plus the $3,000 that we calculate in taxes, you only pay $4,000 instead of $7,000. So that's a big difference that we have to consider when we have that LLC and our income will exceed at least 20,000. So you don't pay that much in Social Security. So that's one of the options. Now, if you register an LLC and it's more than one owner, like you and your spouse or a partner that you have, that automatically become a partnership. And you have to file your taxes similar to the S-Corporation, but the form is called 1065, which is a partnership. And from that partnership, it will mostly the same, but you have to pay self-employment tax in the whole net amount also. So the better way to do is, again, converting, applying for that classification as an S-Corporation from the IRS for that LLC. It doesn't matter if the LLC has one owner, two or more owners. you can apply for that S corporation. People recognize that as a small corporation, but really the term is subchapter of corporation. Because a corporation, which is an Inc., that's another option to register your business. Corporation, the Inc. However, corporation pay higher taxes and is completely separate from your personal taxes. If that's convenient for you, that we have to see the different situation to see is that really convenient for you, because when you pay taxes in a corporation, the minimum you pay on taxes is 20%, 22%. And when you transfer that with an S corporation to your personal taxes, they start in 10%, 12%, 14%, but the corporation is right there, 22%, depending what changes do the government in that area. So it is important that we learn that we're a business owner and how to work the best classification for that business for tax purposes.
Absolutely, Digna. And one of the things that you educated me on when I started was the classification is strictly tax purpose driven.
Yes. Mm-hmm.
So really when you're doing maybe the first year, you sit with your accountant, such as yourself, over at Dreamline Accounting and determine that's what your accountant is there for, to really let you know this was how much we've made, this is how we should classify the business to maximize your earnings and minimize the taxes.
Mm-hmm.
And obviously do everything copacetic within the windows and the allowable terms of the IRS, but to be doing it in an educated manner that's going to benefit you and maximize the profits to your bottom line, because that's what we're here for, to maximize the profit to our bottom lines. I did want to just touch back on with the 1099s, because we see so many people moving from the corporate world to starting their own company.
Yes.
And having different appointments. So, for example, you have someone who has all their insurance license, they're appointed with home, auto, insurance companies. They may also be appointed with other companies for their life variable annuities, as well as group benefits and things of that nature. Because all of these different appointments, they could still particularly have their business fictitious name added as the owner of those appointments, so that at tax time it makes it more feasible to determine the income than having it under your own name.
Yes. And the fictitious name, since you mentioned the fictitious name, is when you're going to register your business, you decide if your name is something that you created, like Biz Boutique or Dreamline Accounting. That's a created name. That's a fictitious name. So in the state of Florida, you don't have to. It's not an obligation for you to register a fictitious name before you register your business. But it's in your benefit, because you make sure that nobody's using that name. So you do a fictitious name and then you register the LLC. The other way that you use the fictitious name too is, let's say you have a business, but you want to promote your business with DVA, doing business as. Then you create the fictitious name, and the owner of that fictitious name, instead of you as an individual, the owner will be your business. So there you do DVA. So let's say my business is Dreamline Accounting, and I want to do promote it different, so I can say, oh, DVA, doing business as Dreamline Bookkeeping. So, and I want to promote the business with the bookkeeping word. There I go and register a fictitious name, and the owner will be Dreamline Accounting. And that's the way to do DBA.
Thank you for that clarification, because I know that's a question that comes up so much. Whether you have an employer or entrepreneur that has, their deli. So obviously that would be their name of their deli. But when you have multiple appointments and you're doing business for yourself, it's important to understand the different ways that you can establish that.
Yes. So and the same is, people had questions. Well, I have this corporation, but I want to do different things. You don't have to keep register different business. You just register the DBA and promote this business using that name. And then when you do taxes, it's only one corporation, so it's not like different corporation, different taxes. Unless you want to do completely separate business, then you do another registration for a new business.
And with the DBA, you would just have that same EIN number under the main company.
Exactly.
Name.
Yeah, it is the same company, just DBA is doing business at. That means I'm promoted by them under this name. So I want to promote more catchy. Sometimes people want to use like more catchy names that they call more attention. So they created the DBAs.
But the EIN, having one with the multiple DBAs, is a lot easier to maintain as well.
Yes,
and
exactly.
for the accountant, the tax purposes and things.
Exactly. So that is important to know, and that's what we offer, although educating the individuals when they go in this business. So small business is our thing. That's what we do. Biz Boutique take care of orienting and giving all the benefits, and we take care of helping them like structure and organizing your books so you have the best benefit when you do taxes.
So you guys, stay tuned because there will be more that Digna is going to unpack for us in the next few weeks for our business owners, our entrepreneurs, when it comes to getting ready. I know one of the other topics we've had a lot of feedback and wanting Digna to unpack is the extensions. Can you just give us a little blurb on the extensions and what we need to be looking for?
Well, the extensions, if you did have a small, an S corporation or a 1065, the extension only protect you for not to have the penalty of not filing on time. But the penalty, if you had to pay, the penalty is a percentage on an interest and penalty of based on the amount that you owe. That is not disallowed. You still have to pay those penalties and interest. So the sooner you do it, is better. Now, for an individual, the 1040, your individual taxes and corporation, the Inc., the extension will you will not be charged the penalty for not filing on time. But you will be charged penalties and interest based on the amount that you owe, unless you prepaid it, because you're supposed to do an extension and prepay the taxes estimated, so you don't have to pay that too much interest and penalties on that amount.
And with those deadlines coming up here, approaching rather quickly, I encourage you that if you haven't already done so, and if you maybe don't have an accountant already, to go ahead and reach out to Digna at Dreamline Accounting. She can definitely help you, walk you through that, and get you ready for those deadlines. She is a great resource that can help you get your extensions filed and properly for your business or for yourself as an individual. Digna, how is it that they can get a hold of you?
So they can call me at 407-529-7772, 407-529-7772. My extension is 101. Or you can email me at dmtaxes@gmail.com with any questions or to set up an appointment. We're here to help you. And remember that experience makes the difference. It's 30 years in business. So we'll be ready to help you.
Thank you so much, Digna, and we look forward to having another chat here, especially with those time frames coming up so quickly.
Yes, and I'm going on vacation, so call me soon.